Before the video will start, LiteFinance has important notice for all IBs from Nigeria. I invite you to participate in Best IB contest. You can win SUVs, $5,000 travel packages, MacBook Pros and many more money prizes. To participate, register with the link from the description under the video or in the pinned comment. Currency pairs are pairs in which the value of one currency is measured against another, and some currency pairs are called major because they are traded much often than other pairs. They all also contain US dollar in them, as it is seen as the largest economy in the world. So let's learn more about those pairs and see how we can benefit from trading with them. And so opinions differ on this question. Some experts name only 4 major currency pairs: the EURUSD, USDJPY, and GBPUSD, and USDCHF, while others think that there are 7, the aforementioned, plus NZDUSD, USDCAD, and AUDUSD. Although US dollar is almost always seen as a compulsory part of any major currency pair, some believe that cross currencies like EURUCHF, EUROJPY, and GBP Euro deserve to be included as well. So if a currency pair doesn't include USD, it is called a cross currency pair or a cross. And so major cross currency pairs can also be called minors. For example, EUROCHF, EURONOK, GBPJPY, and many more. A forex trade is the buying of one currency and selling another at the same time. So when you purchase a currency pair, you buy the base currency, it is one that is written first, and sell the quote currency, the one that goes second. And vice versa, when you sell a pair, you sell the base currency and buy the quote one. The prices of trading pairs and currencies are affected by interest rates, economic growth, or the GDP of countries whose currencies you are trading in forex. And so US dollar is a compulsory part of any major currency pair. They are called majors because 75% of all trades are with these pairs. Euro dollar alone takes 20% of all transactions. And so the USDJPY, the GBPUSD, and USDCHF follow with a relatively smaller share of the market. So why traders traded the major currency pairs? The answer is simple: it's really profitable. So major pairs have smaller spreads than exotic currency pairs, which attract more traders. This keeps the volume of major pairs very high. So why are high volumes so crucial? Well, the higher the volume is, the easier it is for a trader to enter and exit the market. Pairs with low volumes are harder to buy or sell. Furthermore, it can move the price significantly. Another reason why high volumes are so popular is that the chance of a slippage is smaller. The two main special features of major pairs are that they are the most stable and most liquid. So major pairs attract traders because it's easy to predict whether the price will go up or down. And so this is very important for traders with little experience. So now let us discuss the peculiarities of each pair, starting with euro-dollar. So the pair consists of the euro and the American dollar. Even though you can trade at any time you want, there are some secrets that can help you to minimize risks. So the best time is when both European and American markets are open and both are ready for business. However, it is a bad idea to start trading as soon as sessions are open. It's better to wait a little. If you prefer day trading, try not to miss the period between 1 p.m. and 4 p.m. GMT, as it has the greatest efficiency. Now US dollar against the Japanese yen. And so the best time to trade the American dollar for the Japanese yen is from 12 p.m. to 8 p.m. GMT, which is the American trading session, and from 11 p.m. to 8 a.m. And so this is the Asian trading session. The pair, just like many other ones, is strongly affected by the GDP growth or fall, inflation, interest rates, and also unemployment data. Now we move on to the pound USD. So the best time to trade the Great Britain pound for the American dollar is from 6 a.m. to 4 p.m. GMT, as you can extract a profit and cover spread and commission costs easier during this period. Maximum efficiency is waiting for you from 8 a.m. to 10 a.m. and from noon to 3 p.m. GMT. Then we go to US dollar against Swiss franc. So the time periods when you can get maximum profit in trading the American dollar for the Swiss franc are between 2 a.m. and 5 a.m. and between 8:30 a.m. to 10 a.m. due to the schedule of economic releases of both countries. And we can also have commodity currencies, which are the currencies that moves alongside the world prices of primary commodity products due to the countries' heavy dependency on the export of certain raw materials. In Forex, there are several commodity currencies such as the New Zealand dollar, Australian dollar, Canadian dollar, Norwegian krone, South African and Brazilian real, Russian ruble and Chilean peso. And so the Aussie USD, the popularity of trading the Australian dollar for the American one, has been growing slowly but steadily since 2000 after the Australian commodities boom. So the best time to trade the Australian dollar to the American one is between 7 p.m. and 4:30 a.m. GMT. Then we go to the USD against Canadian dollar. So the pair includes the, of course, American dollar and the Canadian one, and the entire North American trading session opens at 12 p.m. and closes at 8 p.m. GMT. And so, if you are thinking about trading the Canadian dollar for the American one, it is better to do it within the time limit to have better liquidity. Then we go to NZDUSD, the New Zealand dollar and the American dollar, which can be active sometimes from 10 p.m. to 7 a.m. GMT, but the best time to trade the pair is between midnight to 2 a.m. and from 6 a.m. to 8 a.m. and also between the noon and 5 p.m. of course GMT. So the New Zealand dollar against the American dollar pairing is often called the Kiwi pair. It accounts for almost 2% of the total trading turnover. So now let's move on to cross-currency pairs, which are pairs that don't contain a US dollar in it. I must say upfront that Japanese yen and euro are the two most widely spread currencies in cross-currency pairing, but we will start from the pound-euro currency pair. And so the European trading hours are considered the best time to trade the Great Britain pound and the euro. And so they are from 7 a.m. to 4 p.m. GMT. Next we have Euro CHF, which pair includes the euro and Swiss franc of course. And after major market announcements, the currency pair experiences higher volumes. So the best time to trade euros for francs is between 8 a.m. to 4 p.m. GMT. Next we have EURUSD. This is another minor currency pair which consists of course of the euro and the Japanese yen. The ideal time to trade it is during news releases around 1:30 p.m. So you can trade the pair with maximum efficiency till 8:30 p.m. Eastern time. So this is very important you remember that right now is the different time zone that I specified. Currency pair prices are divided into two categories: the bid or buy price and the ask or sell price. The value of currency pair is determined by the strength or weaknesses of the base currency in relation to cross currency. So the base currency value is always 1, and currency prices are constantly changing. The prices of major pairs change more often because so many traders put through orders all the time. However, the price volatility is low as these pairs are considered the most stable. The price for the EURUSD may be 1.1285, which means it costs $1.1285 to buy 1 euro. If the rate moves down to 1.1238, that means the euro has decreased in value because it now costs only $1.1238 to buy 1 euro. And so if the rate raises to 1.1290, it costs more USD to buy 1 euro. So the US dollar has decreased in value, or the euro has appreciated. And so that would be all from my side for this video. Thank you guys for watching, and till next time. Goodbye.